Mike, it seems like every 2 days the bottom falls out of this market, just randomly.
Absolutely. And today we were just hit with, if you talk about a wall of worry for the stock market, I feel like we were hit with just about every brick, starting in China, the sell-off there, uncertainty about whether Chinese stocks have actually found a bottom. Then this morning we have earnings that really had some violent reactions, 3M, especially Caterpillar, especially, kind of hinting at the concerns that a lot of people have had about the trade tensions, that higher costs are inflation specifically targeted at companies' bottom lines with raw material costs, labor costs, transportation costs, some related to the tariffs, some not. But then this final leg is clearly all about Italy, with the European Commission coming out with a negative opinion on Italy's deficit plan. I think this was not a surprise that the European Commission would push back on this, but it was a pretty aggressive wording pushing back against Italy and giving them 3 weeks to resubmit the budget. So I feel like if that's a game of chicken, it really seems like it's intensifying this morning. And that kind of is the last leg of the sell-off we've seen. Now, technically, too, it's just a mess. I mean, we're below the 200-day moving average. Some people looking at the 50-week moving average or the 55-week moving average. Both of those have been breached as well. The 2,700 level is an interesting one to watch. The S&P seems to be clinging to that to some degree, but if it blows through that, it's hard to say where, from a technical standpoint, the buyers will be happy coming in.
I think we've done 27, so we're kind of below that. And as you say, we've also taken out the October 11th low as well. How important are those kinds of levels, Mike, in encouraging people maybe to come in and take a look at maybe picking up some stocks on the cheap? Or do you think the price action today and the aggressive move low that we've seen will discourage them from doing that?
Guy, I think they're more important on sort of slow news days when there's not a lot of fundamental or geopolitical news entering the mix. If it's a quiet summer day, the technicals may take on more significance than a day like today, where again, back to the reaction to 3M and Caterpillar's earnings, very nasty reaction to those earnings. And then the Italy situation really getting front and foremost in attention right now. All of those things, I think, allow people to put the technicals on the back burner for the moment. So it's not too surprising that we've seen these technical levels fail so quickly. As you pointed out, the October 11th low, I know personally I thought, the market might test that again and hopefully find a floor there. But as the cash trading goes on, it's clearly getting no support from that October 11 low or really any of the other technical levels. So it's clear that sort of the geopolitical angst of the day and these earnings issues are front and center. A lot of people have been waiting for the signs of the trade war and tariffs to start appearing in economic data and earnings data. And even just this hint of it today, I think, is freaking people out to some degree.